What is good, everyone? Welcome to today's lesson of the day. Today we're going to be covering CISDs, also known as the creation of an order block. Okay, so a CISD, in simple terms, for a bearish candle. This is actually not simple terms. This is my definition. I'm trying to think. I literally thought of any better definition of this, but this is the best I can come up with. Closure below the candle or series of up-close candles that swept liquidity or hit a PDRA. I don't know. I hope that makes sense. It sounds like a lot, but it'll make more sense when we get into it. And then a bullish CISD is a closure above the candle or series of down-close candles that swept liquidity or hit a PDRA. Okay? So a bearish CISD looks something like this, where we have, this formation here, and then we get a closure below the opening price. That's what I had to write. Closure below the candle. See, this is the problem. Sorry, I needed to add the opening price. Or I can just write the body, same thing, but whatever. Sorry about that. Okay. So yeah, opening price, or the body, and it'll look something like this. This is what a bearish CIC usually looks like, and we'll respect that. Or it'll look something like this, and we'll respect that. And this is what it looks like. So we have a series of up close candles, and we hit the key level. We then get a body closing below the opening price, right? So this is the body closing below the opening price or series. Sometimes it's just one candle, sometimes it's a few. Or series of up-close candles that swept liquidity or hit a PDRA, so just a key level, right? So then once we get a body closure below this, the opening price, this is a CISD. Now, there's a difference between a CISD and a market structure shift. A market structure shift is a closure below the wick. So you'll oftentimes see a CISD happening first. There's times where it will happen at the same time, but a market structure shift needs a closure below the wick, and this is a market structure shift. But a CISD, you just need a closure below the body and the opening price here. So once we get that, this is the creation of an order block, and this is a CISD. Okay. For this key level, does it have to be a higher time frame? Yes. For it to be like a good CISD, yes, it does need to be like a higher time frame key level. But yeah, obviously price is fractal, and price is fractal. So a bullish CIC then. A bullish CIC is a closure above the opening price of the candle or series of down close candles that swept liquidity or hit a PDRA, right? That's just a refresh. Okay, so we have a series of bearish candles here. We are in a downtrend, and then once we hit a key level, we then get a body closing above the series, or one candle, this could also be, of down close candles that swept liquidity or hit a PDRA, right? So once we get that body closing above this opening price, this is at this candle. Once this candle closes, this is your change in state delivery, right? So this right here, guys, this was not a change in state delivery. This candle is not a change in state delivery. Not until we get a body closing above this makes this a true change in state of delivery, right? And then this gets respected. As you can see, we then trade it back with this wick, and then price delivers higher. Is one better than the other, or would it be the same? What do you mean? What are we talking about? I personally like CISDs just because you're getting in usually faster. You guys usually get usually what happens is you get a inversion. So you usually I think I drew this out before, but you get an IFEG usually first happening, and then you usually get a CISD right here, usually around here, and then you'll get a market structure shift, and then you'll get a break of structure up here. So yeah, that's usually how it goes. But IFEG is usually going to get you the best entry. For even more confidence, you can get a CISD. Even if you want even more confidence, you wait for the market structure shift. But CISD is what I trade. So no, a break of structure happens after a CISD. Do you ever enter off these? Yeah, all the time. Yeah, I actually entered off of that very recently. We can go to fuck, if I can remember the day, that would be great. But I think it was last week. But maybe. I mean, let's just stay on here until everyone understands this, and then we can get into some examples. I'll look up the date in the meantime. But does everyone understand this? Don't you target them as well, though? Not just... No, I never target a order block. No, I'm never targeting that. There's never a time where I'll target a CISD, no. Can you play the CISD like ABS? Yeah, I mean, usually it's going to look like it's an ABS model. Like, well, if we have a CISD, there's most likely an inversion here. So yeah, this is an anticipatory breaker. It's going to be probably harder. I mean, it really depends on how the wick is. Sometimes there's like literally no wick, so you kind of just have to play the breaker. Depends on what the structure looks like. So would a 15-minute CISD be ideal for a 1-minute entry? Yes. Yes. Because we did time frame alignment, right? Do you guys remember that? I can open that back up for you guys, if just a little refresher for time frame alignment, right? So a 15-minute PD array, you want to see a 1-minute CISD out of that. A 1-hour PD array, you want to see a 5-minute CISD, 4-hour, 15-minute, 1-day, hourly, to get confirmation that the PD array is valid. And again, change state delivery, this can also just mean like a breaker block getting formed as a change state delivery, an inversion for valley gap as a change state delivery. It's just changing order flow, right? No, breaker structure happens after market structure shift. So I can show this again, where we'll have an inversion for valley gap getting formed. We'll have a market structure shift, or we'll have the CISD. We'll then have a market structure shift also, and then a breaker structure will happen after. So what's the difference between a breaker structure and a CISD? So a CISD, yeah, so I guess I'll just draw this out. I feel like there might be some confusion with all the terms. So it looks something like this, where so like we get a closure above so let's say we have a bearish for valley gap here. This is obviously an inversion for valley gap. We then get a body closing above the series of down close candles that swept liquidity. So let's say there's a wick here, right? So this is your CISD. Then your market structure shift happens after that, where we get a closure above the wick. So, right? So this is a closure above the wick. This is a market structure shift. And then after that, once we get the retracement and go higher, that's a breakup structure. Okay. How is CISD a creation of an order block? Good question. So an order block is not an order block until we get a body closing above that candle, right? So we'll get into order blocks after this, but an order block isn't an order block until we get a closure above the opening price. Once we get a closure above the opening price, then that's the creation of an order block. I understand what it is, but not how to use it. Yeah, we'll get into some examples in a second. As long as you guys understand it, that's all that matters for now. I think the other week you took an IFEG above the CISD. Is it not better to take a IFEG after? So, you know, if there's a IFE, I mean, it really all depends on the setup, guys. Like, I don't have a set entry model where I'll be like, okay, I need an IFEG and a CISD to take an entry. Like, if the IFEG is there, it's there. If an IFEG and a CISD is there, it's there. Right? So, what candle is the break of structure with? Is CISD the body, the market structure width? Yeah, so it's just after the market structure shift happens once we get another closure above that candle there. Yeah, that is a bullish CISD. Jake, yes. Okay. Cool, cool, cool. And you do want to be drawing it. Now, with like order blocks and with CISDs, the whole entire candle technically is, well, we'll just get into that after. For now, let's just do CISD. Okay. Yeah, it acts as support, resistance, right. Exactly. I think there was an example last week we can get into. I mean, CICs form every single second, so we'll do live time, but I think this was just like a really obvious example. I think it was the 14th, if I'm not mistaken. Let's see, yeah. Okay. I think so. All right, so look. Yeah, but that is a CISD. This is a CISD. We get a body closing above the opening price of this down close candle that swept liquidity. The market shift, like, yeah, I mean, happens like up here, like. No, I don't use market shift. I just use CISD, to be honest. So, yeah, and as you can see, this just gets respected. Yeah. Okay, so this is an example of a CISD. Okay. So here we trade into this key level here, being this 15-minute bearish fair rally gap. After we hit this bearish 15-minute fair rally gap, we have a series of up close candles that swept liquidity. Okay, so guys, where would the CISD here happen? Would it happen? Give me 1 second. Would it happen at A? Would it happen at B? Would it happen at C? Or would it happen at D? A, B, C, or D? A, B, C, or D? So this is A, this is B, this is C, and this is D. B, right? B. Okay. Yeah. Okay, so for those of you guys that answered B, you're correct. If you answered it wrong, let me just show you why it's B, right? So the series of up close candles that swept liquidity is right here, right? So we have this down close candle, and then we have these up close candles. We have 1, 2, 3, 4. This series of up close candles that swept liquidity, right? So we swept this liquidity here and tapped into our key level, which is that bearish 15-minute gap. Once we get a body that closes below this, this is going to be your change in state of delivery. All right, so you can do it like this, and boom, we get a body that closes below the series of up close candles that swept liquidity. There you get your change in state of delivery. And I actually did take this trade, and I put a limit order right here at this change in state of delivery. I had a stop loss out here and a target for about a 1 to 2 RR. And as you can see, we come up. We respect this order block, creation of the order block there, and we run. Now with that, we also get what? We also get the IFEG, right? We get that inversion for value gap, so even more confluence. Right, so just putting things together, an inversion for value gap and a CISD is usually like a really good confluence. Yeah. Yeah, we get an IFEG first, right? I think I Just didn't have enough confidence for this because I don't know. It was just 11 o'clock, so I was waiting for a little bit more confidence to take this trade, or confluence. Yeah. I put this on the IC chat. Didn't we have a CISD on the 15-minute first tap? Didn't we have a CISD? Yeah, so let's look at this chart. Okay, so after this, we tap into this 15-minute gap. Our CISD happens right here. So once we get a body that closes below the series of up-close candles that trade it into this 15-minute gap, we get a change in state of delivery right there. And as you can see, we do then trade up and wick that opening price right there. Okay, so that's an example of a bearish CISD. What time frame is that IFEG? A 1 minute. I had a CISD, but I didn't have an inverse, so I hit stop loss. Damn. Yeah, a CISD and an inversion usually is like best confluence. Looks good. So you can just enter off of the CISD rather than wait for an IFEG. No, an IFEG usually happens first. Yeah, the IFEG happens first, yeah. 9 times out of 10 it does. I mean, I'm trying to think of like a timer it wouldn't, but I can't. I don't know. Is that even possible? It definitely is. Yeah, it definitely is. Yeah. No. Anyways. But why wasn't a CISD before the 5-minute inversion, since it was the first time price was hitting the 15? What do you mean? Let's check it out again. Oh, you're looking at here? Yeah, this is a change in state delivery, yeah. Yeah, this right here, this, well, no, this is actually, no, the change in state delivery would then be, what are these candles? This closure here. Well, let me look at this on my own chart. I can't really understand these chart colors. What was this, PM? Yeah, let's just go through like live time. Would you enter off of the CIC without an IFEG? No. So if I'm not confident in the trade with the IFEG, I can wait for CIC then enter. Yeah, that's usually something I do sometimes. Yeah, chart settings are posted. You can go to the FAQ channel. Does it need to be a displacement with the CIC for it to be more probable? No, not really. I mean, yeah, but as long as there's just a closure below the opening price, there's usually just displacement. Is there any time where you should wait for the CISD instead of just taking the inverse? Yeah, there are times where, for example, in like PM session, a lot of the times, or times where price action is just really slow in general, or if I'm not really confident in the draw, CISD I use a lot of the times for like bias reasonings. You'll oftentimes hear me say, like, if we get a closure below this, then we should go here. Like, in the same way as like a market structure shift, there's break a structure, that sort of thing, where I'm waiting for it to either, I can either use it as an entry model, right, or as an actual trade. In that example, he had an IFEG tapped in that key level showing down. Yeah. You can put a stop loss. It really depends. The fair value gap at the breaker, at the actual candle, the series of up close candles. But yeah, let's just like run through today's price action and let's see if we can find some. Okay. Let's just like go on like the 5-minute chart. All right. So I mean, there's a lot of like examples here. Kind of get overwhelmed with examples, but let's just like look to find the most obvious ones. The most obvious one that stands out to me is this. All right. We get a closure above the series of down close candles here that ended up sweeping out this low here and trading into this 5-minute gap. All right, so these are the series of down close candles. Once we get a closure above that, that's your change in state delivery. Didn't get respected too well. This also is a change in state delivery, right? Didn't sweep liquidity, but we trade into that PD ray. Once we get a closure with this candle, we see how the wick respects that, and we then trade higher. Again, CISDs you want to be using in like bullish order flow, a bullish CISD and bullish order flow, a bearish CISD and bearish order flow. Right. What else? What else? What else? For example, here. It's a really nice example here. We ended up having a series of down close candles here that traded down into this fair value gap and ended up sweeping out this liquidity, right? So this is the series of down close candles. Guys, where would a CISD occur? Would it occur at A, B, C, or D? Would it occur at A, B, C, or D? Wait, is this an up close candle though? Wait. No, this is down close. Okay, yeah. B as in boo. Yes. B. Okay, so this is your series of down close candles here that swept liquidity. If you answer B, you're correct. This is your series of down close candles here that swept liquidity and traded into this PD, right? So once we get a closure above this, this is confirming your bullish order flow. All right. Once we get a closure above the series of down close candles. All right, so your CISD happens there. And there's times where, like, no, this is a valid CISD because we are in bullish order flow, but pay attention to, like, where the candle closes. Like, to be honest, I would probably, like, I'd wait and go on, like, the 1 minute chart and stuff to, like, see if this is really valid, because if we get a closure like this and, like, we actually, like, take out liquidity, like, just use, like, common sense, you know? Like, if we take the target and we do something like this, like, I don't know, there's times where it just fails. So, just common sense. Yeah, let's keep looking. Again, nothing, like, too obvious. There's, like, really no, it wasn't that good of price action today. Trying to look for, like, obvious ones. Okay, I mean, do that, I guess. Okay, I mean, here's an example. All right, let's say we hit a key level here. All right, where would your CISD happen, guys? Would it happen at A, B, C, or D? This is our key level. Where would it happen? D, right? All right. So it looks like we all understand it pretty much, right? This is your key level. We then have our series of up close candles here that swept liquidity or hit our key level. Once we get a body that closes below that, so your CIC happens not here, right there. This is your change in state delivery, and then this opening price here gets respected, and then we trade lower. Okay. Got a lot of questions. Let me answer these really quick. Since you guys enter off IFEG that happened before CICs, I'm assuming you only enter off them when the close is bad on inversions. Because we're in the trade before this confluence, let me know. Yeah. Like, if I can, like, limit order it, yeah. Yes. It becomes an order block. An order block is created, like a good order block is created once we get a closure below this. All right. Wow, PO is really trash today. But let's just go to, like, yesterday. Wow, yesterday was even worse. Yeah, like, for example here, this is not a bad example, but, like, there's times where we will, like, just hit the wick of the order block and we won't actually hit the opening price. Opening price is typically what I have, like, limits set on, though, just for RR reasonings, and also it's just the most sensitive, and you typically will see us trade back into there. this is an example here of a CIC, right? And this is an example where we don't have a, oh, actually we do have a series of up close candles, right? So we have this up close candle here that swept liquidity. Once we get this body closure below this, which is right here, this is your change in state delivery, right? So your change in state delivery is not going to be all the way down here. Why is it not going to be all the way down here? Because we have a bearish candle right here, right? So this is your change in state delivery. Right, so once we get that body closure, this then gets respected into trade lower. Okay. This is also an example right here. But yeah, let me go back to answering questions really quick. Since you guys enter, I already answered that. Again, it really depends. Like, price is fractal, so it depends. And I'll use what we were talking about in the other lesson that we had about time frame alignment, right? So it depends on where we're actually delivering from. But time frame alignment is super key. So if we're trading off of a 15-minute gap, I'll wait for a 1 minute. If we're hitting an hourly, I'll wait for a 5 minute, 4 hour, 15 minute, right? Since you guys and it's not about CISD, but when trading, what's the highest level for a stop loss? Like the actual swing. So like the highest level for a stop loss, and it'll usually be if I'm like taking an entry like here, like I'll put my stop loss like here, right? Like the wick of the swing high or swing low. That's usually my highest level I'll have it. Or lowest, you know. Why? Wait, I feel like I just missed a question. No, I just wouldn't take the trade. CIC is not my entry model. I'm going to enter with inversions. This is just extra confluence, and I use CISDs as just a way to find my drawn liquidity on the higher time frame, to find my bias, to see if PD arrays are getting respected or not, and then also sometimes for entries. Why was this one then in OB? We didn't trade into something significant with this down close candle. Yeah, so an order block, let's just get into order blocks really quick. An order block is essentially a green candle that's sandwiched in between two red candles, or a red candle that's sandwiched in between two green candles. So like a really good order block is when we have us trade into a key level. But oftentimes, right, if we have a green candle that's sandwiched in between two red candles, once we get a body that closes below that or above it, for example here, we had that hourly order block today, right? This is why I took this long, right? So right here, this is an order block, okay? This is a red candle that's sandwiched in between these two green candles. And this is a bullish order block, okay? And what I actually should have done today was wait for the opening price. Do you remember when I was talking about how the opening price of an order block is super, super significant? Well, you can see how we reacted off of that opening price today, right? So I did take this trade in mind with this order block that I took today. I took a long, and I should have waited for the opening price because we actually edged it, stopped me out instantly, and then we hit the opening price and then immediately had that move. So this is how Powell bottom ticks, for those of you that are wondering. I'm just kidding. But that is a bullish order block. And it's not an order block until we actually get a body that closes above the candle, right? So once we get this, I don't, like, at this point in time, I don't know if this is an order block, right? I have no idea. Not until we actually get a body that closes above the candle. Then that's an order block. What else? For example, here, like, this is not an order block. Not an order block. There's no body that closes below this. But yeah, see, this is like that 1 hour. There's a 15-minute order block, right? So red candle sandwich in between two green. Another red candle sandwich in between two green. This is your order block 2. We don't retrace to it. Can also be a series. Order block here. It's like a higher time frame CIC, right? Yeah, usually like an order block with a fair value gap is super good, super high confluence. But order blocks are literally everywhere in the market. You can just go through them on the 1 minute time frame right now. For example, here, this is an order block, green candle sandwich between two red. And of course, like, this is super like pattern trady, but when using correct like order flow or, you know, just setting your stop loss, for example, here, right? What was the entry or what was the order block today? That was really obvious. But like really in any like downtrend, like these like green candles should get respected. And in any uptrend, these red candles should get respected. Does that make sense? So like a green candle here, sandwich in between these two red, right? This should get respected. This opening price here should get respected. Once we get a closure above that with this candle. Once we get a closure above that with this candle. Right? This is your order block here. Another order block here. Another order block here, right? And then example here. This is your order block here. Green candle sandwich between two red. Closure below that. But yeah, order blocks, just a green candle sandwich between two red or a red candle sandwich between two green. Let's check questions. Oh yeah, also with order blocks, it's the whole entire candle. So an order block is like this whole entire candle. Technically, it is this whole entire candle. I see people draw out the whole entire candle sometimes. Some people only draw out the wick. Some people only draw out the body. Some people only draw out 50%, which is why I kind of have that 50%. I personally use the wick and the opening price here. So I'll use the wick here and this opening price. So I'll kind of draw my order blocks like that. Because the opening price just tends to be the most sensitive and just like the best entries usually. Now there are times obviously where we will hit the wick and not the opening price, but yeah. What else? So yeah, with like stop losses, you'll oftentimes see me be like, okay, I'll just put my stop loss at this down close candle here, because if we're in bullish order flow, this down close candle should support price further once we get that closure above it, right? So like there's no reason for this example to put like a stop loss all the way down here when we have this order block, right? It's just a simple way to just get a little bit better RR. So you can have a stop loss at like the whole entire candle. Yeah, that seems fine. There's a lot of different schools of thought with using only the wick. Bro, to be honest, it really just depends on RR, I think. You longed in PM, yeah. I just took a mech model. I don't really trade PM unless it's like a fucking obvious mech model, but I was a mech model to an unfilled 15-minute gap and those equal highs off of a 1 hour order block. Yeah. There's nothing that holds more weight. Again, yeah, price is fractal. There's not one time frame. Exactly. And this is something, I feel like this is like a really common question among a lot of people. Like with overall like bias too, like what time frames used for bias? Like, brother, there's gonna be times where I'll have a bearish daily bias because there's like triple sets of like equal lows on the 1 minute time frame, right? And that doesn't mean like my bias is wrong, or I can't use the 1 minute for my time frame. Like I'm using every single time frame and I'm just combining them, right? I'm doing like a top down analysis. But like yeah, if there's times where there's fucking triple equal highs or like super obvious low resistance liquidity or trendline liquidity or data highs that you can't see on like the 5 minute or 15 minute or hourly, but it's on the 1 minute, then yeah, I'm gonna have a bullish bias or a bearish bias or whatever. So I'm using all time frames, guys, and like order blocks. There's not one time frame that's the best. Again, it's use time frame alignment, use the higher time frames for bias, lower time frame for entries is what I'd say. But yeah. So also an order block right here, right? Once we get the closure with this candle right here. So at this point in time, right, you don't know if this is going to be an order block until we get the body that closes above this, right? And you can see that just gets traded into and we respect it. And that we don't hit this for rally gap, right? Because we have that order block in the way. But yeah. Same thing here. But yeah. Does it have to be the third candle that closes above the body or the second? So it's like a 3 candle pattern, right? So it's like 1, 2, 3. So it's like green candle sandwiched in between 2 reds, or red candle sandwiched in between 2 green. So like technically the second candle can't close because it's the one in the middle. It has to be the third one. Where a 1 minute OB. Where a 1 minute OB might be a draw to a 5 minute PD array or 15-minute OB. I don't really understand this question. I think what are you trying to like just talk about time frame alignment? So time frame alignment. Also, I got this question also. I think what you're saying is like, can you use a 1 minute order block to take a trade to a 15-minute PD array? And that's not what time frame alignment is about. It's about whether that PD array is getting respected. So let's say this is a 15-minute for a rally gap. If we get a 1 minute change in state delivery or inversion or whatever out of this, then this is like a valid. This is getting respected. Or let's say this is a 1 hour for rally gap. Once we get out of this and we get a 5 minute change in state delivery, this is a valid trade, right? So for example, with time frame alignment, again, this was the trade I took with what time? I forget the day it was now. 14th, maybe. I think it was here. Right. So we hit a 15-minute for rally gap. Right. So this is your 15-minute for rally gap using time frame alignment. What do we need to see if this is respected? A 1 minute CISD, right? So you go on the 1 minute time frame. We get a 1 minute CISD, and then 1 minute inversion. That's a flip and order flow. And that's a continuation of the order flow, and then right. So that's using time frame alignment. If OB gets disrespected, yes. So like a disrespected order block is a breaker block. Patrick's gonna get into breaker blocks and inversions soon. But yes, an OB getting disrespected, just an inverted order block, is a breaker block. Do you treat order blocks the same way you treat fair value gaps? Like, for example, an unfilled fair value gap. So that's a good question. I don't really treat it like that. I've never really thought about it like that. Like, I won't be like, we already hit this order block, or like use it as targets, because like an unfilled fair value gap, I'll use as targets, right? An unmitigated order block, I won't use as a target. And I think the reasoning for that, and I don't treat it the same way, is because it's not a void, right? It's not an imbalance. The market isn't moving to, like, that's not an imbalance in the market. An order block, an unmitigated order block isn't an imbalance, right? It's just a area where you get orders, and if the orders weren't filled there, then yeah. So no, I don't treat it the same way because it's not an imbalance. Fair value gap is an imbalance. For the trade that you took in PM, I didn't hear you fully. You said you should have waited for CE of the 5-minute OB to get hit. No, the opening price of the order block right here. So the opening price of the order block was here. Right here. Alright, so you draw out that. And we first didn't hit it on that first long, and that's why I got stopped out, and then we traded lower, and then we hit that key level. And then it played out. And then like here, right, you can just have a stop loss at these down close candles. And once we get that closure above it, we then tap into it, respect it, closure above it, tap it, respect it, closure above it, respect it. But yeah. So candle 1 and 3 got to close under above the second. So candle 1 and 3 got to close under and above the second candle body only. So the third candle, so for example, let's just show you on the 1 hour. I don't really know if, like this, you don't know if it's an order block yet, right? Once we get a body that closes above this candle, it becomes an order block. So boom, we get a closure above this. Now this is a bullish order block. All right. It's just a 3 candle pattern, and you can flip this around for a bearish scenario, right? Just make this a green candle, and it's the same thing. And flip this around. How does an OB? Yeah, Patrick will get into that. It's just a break. It's just literally just a breaker block. Just closes above it or below the candle. No, OB getting an OB getting made is the creation of a CIC. An OB getting disrespected and getting ran through is a breaker block, and we'll get into that soon. An area where price is respected and supporting price for rally gap is an area of resisting liquidity that hasn't. Wait. An area where price is respected and supporting price fair value gap is an area of resting liquidity. It's an imbalance of orders. I wouldn't say a fair value gap has liquidity. I don't know if I don't really know what your question is, to be honest. Yeah, exactly, Santi. Wait, what? Sorry, I just read exactly, Eden.
You say Santi.
Santi just texted me. I was like, what? A bearish for rally gap. So it's CISD OB then breaker block if the OB is distracted. Directed, disrespected. Distracted, directed, disrespected. Bro, what? What? A bearish rally gap or SIBI is an imbalance of sell orders. Yeah. Exactly. A sell side imbalance, right? A sell side inefficiency. Oh, is that? I think that was Jake's question, right? Yeah, it's not. It's not resting liquidity. Don't think about it like that. Like a SIBI is just a sell side imbalance of orders, right? The market just moves too fast, and we have, right? This is like too fast of a move for anyone to get in. So this is a, like, it's not liquidity, right? It's just an imbalance of orders. And then here, the market moves too fast, then we gotta put in orders. Right. Just filling orders. What does that mean? Can I go on a specify? Oh, can you? Yeah. Request to speak. Yeah, guys, if you have any questions, like, please request to speak. Because honestly, sometimes in chat I can't like understand what your guys' questions are. I think I just accepted you. Yeah, an OB is just yeah, you can expect it to retrace and continue, right? Like in a bullish trend line, you'll see those down close candles get respected. And then in a bearish trend line, you'll see these up close candles get respected. Breaker, yeah, we'll get into breaker blocks in a second. Yeah, that's weird. I'm accepting you. I don't know why you can't join. It's weird. But what was your question again? The difference between OBs and fair value gaps?
Yeah.
No, I didn't word it correctly. Someone said, can OBs be used as a target? Right, no. I said no. I don't. No, I'm never targeting an order block as a when I'm taking a trade. If we got a bullish move up, how do we anticipate if we're going to retrace into a fair value gap or an order block, whatever is under 0.5 of it? Yeah. There's times where like there will be like a breaker in the way. For example, today, where we hit like a 5-minute breaker. So there's times where you won't get a retrace and you can anticipate it just not getting hit. Like literally, for example, today we had this 5-minute for rally gap, and do we hit the 5-minute for rally gap? No, because we hit this 5-minute breaker or order block. Right, this is your down close candles here. Series of down close candles, like a 15-minute order block. All right, so we ended up hitting that in this area, this breaker area, and we didn't hit the fair value gap because this is just above it. Right, so. my response was, and my response slash question was, an OB is just an area where price can be used as support. Yeah, exactly. But don't think of it as an area of liquidity. Think of it as an imbalance. A fair value gap is just an imbalance of orders. Like liquidity is different from an imbalance of orders, right? Liquidity is literally resting orders. An imbalance is there isn't orders, so you need to fill orders. No. Okay, Pat, are you ready for your?
Yeah.
Okay, cool.
Are you gonna keep
I'm gonna.
recording?
No. This I don't know if I need to stop, so this shit doesn't crash. Okay, I'm gonna stop.
Okay. And we're